One of the keys to running a successful business is its owners and managers' ability to predict how the business will perform financially. If you can accurately predict your firm's performance, you can be certain that you can deploy resources, such as money, people, equipment, manufacturing plants, and the like, appropriately and in the most effective way. A budget is nothing more than a written estimate of how an organization or a particular project department or business unit will perform financially. The real value in budgets comes when you compare estimates of expected performance to actual performance. When the numbers match, you know that your organization or project is performing just as it should. When the numbers differ markedly, you know that you need to ask the question, why, and take a very close look at what's going on. The process of comparing expected financial results with actual financial results is called variance analysis. With the speed of business increasing all the time, why bother doing budgets at all? Aren't things changing too fast for budgets to be of any value? In most cases, the answer is a resounding no. Budgets offer the following benefits to organizations that use them. Budgets are milestones on the road to your goals. Every organization has, or at least should have, goals. Budgets are quick and easy ways to see whether your organization is on track to meet its financial goals. If, for example, you've already spent half your travel budget, but you're only 1/4 of the way through the year, you know that you potentially have an overspending problem. Budgets make decisions easier. When you budget a project, initiative, or business activity, you'll quickly have a picture of what it will cost. Armed with that information, you can decide whether the costs you'll incur make good business sense or not. Will you make money or lose money as a result? How much money? For how long? The answers are important elements in the decision-making process, and they come from the budgeting process. Budgets can be fast. A budget can be as quick and simple as a few figures scribbled onto the back of an envelope over lunch. Ever heard of doing a back-of-the-envelope projection? A budget also can be a simple one-page computer spreadsheet. Not every budget has to weigh 10 pounds and result in mass deforestation. With simple budgets, you can make changes quickly in near real time and print them out or email them immediately. Budgets can be flexible. Need to hire a few new employees to take care of an unexpected order? No problem. A budget can accommodate the change and create an up-to-date picture of how your organization is performing. Or you can simply freeze your budget to see the variance between what your budget predicted and what really happened. Regardless of how fast your markets are moving, you can always keep up no matter where you are. Budgets are fun. Okay, maybe we're stretching things just a bit here, but honestly, creating a budget in which the actual results match your expectations is a real thrill. The only bigger thrill is when your results are even better than you expected. Remember, whereas extensive long-range strategic planning seems increasingly less valuable to most organizations today, near-term tactical planning is becoming incredibly valuable. Budgets are a very necessary part of the tactical planning process. Now that we've sold you on the value of doing budgets, you are sold, right? This section looks at some of the most common kinds, as well as how to create and use a budget. When it comes right down to it, you can budget any activity that has a financial impact on your organization. Want to budget a self-managing work team? No problem. A research and development project? Piece of cake. The new headquarters construction job? All in a day's work. The following list presents some of the most common budgets used in business today. Cash budget. An estimate of a company's cash position for a particular period of time. By using your current cash position as a baseline, you can estimate all cash inflows, sales, and outflows, expenses, during the time period you specify, say a month, to determine a projected cash position at the end of the period. Operating budget shows a business's forecasted revenues along with forecasted expenses, usually for a period of 1 year or less. The operating budget is a top-level budget. The budgets that follow on this list are line items in that operating budget. Labor budget takes every person in an organization, department, or project and multiplies the number of hours they're expected to work by their wage rates. The result is the total labor cost to be expended for a set period of time. Sales budget, an estimate of the quantity of goods and services that you'll sell during a specific period of time. In the case of products, you estimate total revenue by multiplying the total number of units projected to be sold by the price per unit. Production budget starts with the sales budget and its estimates of the total number of units projected to be sold. The production budget then translates this information into estimates of the cost of labor, material, and other expenses required to produce the units. Expense budget. Every business, from a one-person home business to a huge multinational corporation, incurs a variety of expenses during the course of normal operations. You prepare expense budgets for travel, utilities, office supplies, telephone, and many other common and not so common expenses. Capital budget. If you plan to buy fixed assets with long, useful lifespans, many organizations consider this to mean a year or more. The capital budget is the place to budget for them. Items in your capital budget may include buildings, production machinery, computers, copiers, furniture, and anything else that will still be in your office long after you're gone. What's the best kind of budget? The one that works. There are many different types of budgets and 3 key approaches to developing a budget: bottom-up, top-down, and zero-based. Each approach has its advantages and disadvantages, and each approach can work well, although the pendulum is clearly swinging in favor of the bottom-up approach. Bottom-up. In bottom-up budgeting, supervisors and middle managers prepare the budgets and then forward them up the chain of command for review and approval. Middle managers have the benefit of a close working knowledge of the organization and its financial performance. As a result, bottom-up budgets tend to be more accurate than top-down budgets. In addition, bottom-up budgets can have a positive impact on employee morale because employees assume an active role in providing financial input to the budgeting process. Top-down. In this approach, top management prepares the budgets and imposes them on the lower layers of the organization, generally without any consultation or involvement on the part of those outside of top management. Top-down budgets clearly express the performance goals and expectations of top management. These budgets, however, can be unrealistic because they don't incorporate the input of the very people who will implement them. Zero-based budgeting, the process in which each manager prepares estimates of his or her proposed expenses for a specific period of time as though they were being performed for the first time. In other words, each budgeted activity starts from a budget base of 0. By starting from scratch at each budget cycle, managers must take a close look at all their expenses and justify them to top management, thereby, at least in theory, minimizing waste. Budgets provide a kind of early warning system that, when compared to actual results, can inform you when something is going wrong and needs your immediate attention. When your expenditures exceed your budget, you can do several things to get back on track. Review your budget. Sometimes it's the budget, not the spending, that's out of line. Before you do anything else, take a close look at your budget to make sure that the assumptions on which it's based are accurate and make sense in your changing market. If your market is growing quickly, you may need to adjust your estimates. Freeze spending. One of the quickest and most effective ways to bring spending back in line with a budget is to freeze spending. For example, you can freeze expenses such as pay raises, new staff, and bonuses. Postpone new projects. New projects, including new product development, acquisition of new facilities, and research and development, can eat up a lot of money. If spending is over budget, a common solution is to postpone new projects until you have enough revenue to support them. Be sure to carefully balance your desire to bring spending back in line against the need to develop new products and services. If you're too zealous in this area, the result can be disastrous for the future growth and prosperity of your company. Ask your employees for help. Here's an old but very wise saying: none of us is as smart as all of us. If your expenditures are exceeding your budget and you can't sort it out on your own, ask your employees to suggest ideas for getting back into the black. Chances are someone in your organization has some ideas you hadn't considered, and these ideas may make the difference between sinking and swimming. Lay off employees and close facilities. When you're trying to cut expenses, the last resort is to lay off employees and close facilities. Although these actions will result in an immediate and lasting decrease in expenses, you'll also face an immediate and lasting decrease in the talent available to your organization. In addition, the morale of employees who survive the budget acts can and likely will suffer, at least for a while.